In the fourth video relating to issue of shares, we will be taking or discussing oversubscription. Oversubscription is a case where more applications are received than the shares offered by the company to the public. Okay, so we can say that when applications for more shares of a company are received than the number offered to the public for subscription is known as oversubscription. In such a condition, three alternatives are available to the directors. The first alternative is that some applications are accepted in full and the others are rejected. Okay. Second case, pro rata allotment is done. In a particular ratio, all the applicants are allotted shares. And the third case is combination of the above two. That is, some applications are rejected and the balance will be allotted shares in a particular ratio. Okay, three cases. Case 1, some applicants are allotted in full and the balance applications are rejected. Second case, to all the applicants shares are allotted in a particular ratio. And third case is the combination of the first and the second. That means some applicants are allotted in full, some applicants are rejected, and the balance are allotted in a particular ratio. So applicants are allotted shares in a particular ratio. To understand all these three cases, we will take one question. Okay, with the same question we will try to understand all the three cases. Now according to this question, Janta Papers Limited have invited application for 1 lakh shares. Okay, the face value is 25 rupees. On application, 5 rupees is called. On allotment, 7 rupees 50 paisa is called, and on first call 7 rupees 50 paisa, and the final call is of 5 rupees. Here see, the application received is 1 lakh rupees, whereas the company offered only 1 lakh shares. So excess application is 3 lakh rupees. Okay. Now see, according to this question, case 1, 4 lakh applications is received at the rate of rupees 5. Bank will be debited by 20 lakh rupees and equity share application will be credited by 20 lakh rupees. Entry is bank account debit to equity share application 20 lakh rupees. Now as per case 1, directors have decided to reject 3 lakh shares. Okay, and the application money received on those 3 lakh will be returned. So on those 3 lakh shares at the rate of rupees 5, 15,000 is returned. Okay, on 1 lakh applications who were allotted shares at the rate of rupees 5 lakh will be transferred to the capital account. On 1 lakh shares who were allotted shares, applicants who were allotted shares, their application money will be transferred to the capital. The balance 15 lakh is returned. Okay, so this 20 lakh equity share application will be debited to equity share capital account will be credited, and to bank the amount, the excess applications amount will be returned. On Feb 1st, the directors have decided to call the allotment money. So on 1 lakh shares at the rate of 7 rupees 50 paisa, it's 7 lakh 50,000 rupees. The amount is also received, bank account debit to equity share allotment. Now see, the first call is made due, equity share first call to equity share capital. On 1 lakh shares at the rate of rupees 7.5, it is 7 lakh 50,000 rupees. On April 1st, the first call amount is received on 1 lakh shares at the rate of rupees 750. Now on June 1st, second and final call is made due at the rate of rupees 5 on 1 lakh shares, so it is 5 lakh rupees. on June 1st, the amount is received. Now see case 2. According to case 2, all the applicants were allotted shares. That means on 4 lakh applications, 1 lakh rupees is 1 lakh shares are allotted. That means it's a 25% allotment. On every 4 application, 1 share is allotted to the applicant. The first entry will be same on 4 lakh shares at the rate of rupees 5. 4 lakh applications at the rate of rupees 5, it is 20 lakh rupees. Okay. Now since all the shares, all the applicants are allotted shares, whatever excess application money is there, that will be adjusted towards allotment and the balance amount will be refunded. Now this calculation is important. See, equity share application 20 lakh rupees. Okay, this 20 lakh rupees is debited. Then equity share capital, on capital at the rate of rupees 5 on 1 lakh shares, 1 lakh into 5, it is 5 lakh rupees. So out of that 20 lakh rupees, 5 lakh will be credited to equity share capital account. Now there is excess application money of 15 lakh rupees that has to be adjusted. So on 1 lakh shares at the rate of rupees 7.5, 7,50,000 will be adjusted towards allotment, and the balance excess money, since the question is silent, will be returned. If question says that you have to adjust towards calls, then it will be credited to calls in advance. Okay, transfer of application money on shares allotted to share capital. Excess application money credited to allotment and money refunded on rejected applications. Here it was not rejected, excess application money is returned. Okay. Now equity share allotment. Okay, allotment money is made due on 1 lakh shares at the rate of rupees 750, it is 7,50,000 rupees. So the first call amount is received. Okay, allotment money. Okay, see, allotment money is made due and allotment money is already received in this case. Okay, so the bank entry we are not doing. Then equity share first call to equity share capital. First call amount is made due for 7,50,000 rupees and that amount is received. In the same manner, second call is made due for 5 rupees at the rate of 5 on 1 lakh shares, it is 5 lakh rupees and that amount is also received. Okay. Now see, read this point. In the previous case, pro rata allotment was done, but the question didn't say that what we have to do with the excess application money. So it was adjusted towards allotment only and the balance amount was refunded. Here, read it carefully. Okay. Directors rejected application for 2 lakh shares. 80,000 shares were allotted in full and the balance were allotted on a pro rata basis. This one, excess application money is to be adjusted towards allotment and calls. Here it is clearly stated that the excess application money is to be adjusted towards allotment and call. Okay. Now to understand this question in a better manner, I have made this table. Okay. You can read this category. Okay, category 1. See, first category where 2 lakh applicants were not allotted a single shares, so their full money received at the rate of rupees 5, 10 lakh will be refunded. Okay. Second case, full allotment was done on 80,000 applicants were allotted 80,000 shares. So at the rate of rupees 5 on this 80,000 shares, 80,000 into 5 is 40,000 rupees. Then 80,000 shares were allotted at the rate of rupees 5. 4 lakh is transferred to the capital. No balance is left. Okay. So no money will be refunded. Now see, the total application received is 4 lakh rupee, 4 lakh shares. Case 1 2 lakh, case 2 it's 80,000. So the balance left is 1,20,000 applications, and the number of shares allotted in total is 1 lakh. 80,000 is already allotted, so the balance left is 20,000 shares. So to the applicant of 1,20,000 shares, we are allotting only 20,000 shares. Okay, now this is a tricky calculation. 20,000 into 5, 1 lakh will be transferred to the capital out of the total 6 lakh received. On 1,20,000 at the rate of rupees 5, 6 lakh is received. Out of this 6 lakh, 20,000 into 5, 1 lakh will be transferred to the capital account. Now on allotment, it's 7 rupees 50 paisa. So 7 rupees 50 into 20,000, it's 1,50,000. So 1,50,000 will be transferred to allotment. Now calls. Now here see, huge amount is there. No, there is a big difference between the applied and allotted shares. So the total application amount received is huge. So if we check the total of first call and second call, that is 7 rupees 50 paisa and 5 rupees, it is 12.5. On 20,000 application shares at the rate of rupees 12.5, it is 2,50,000, and it is enough there. No, 6 lakh rupees is there, 1 lakh is transferred to capital, 1,50,000 is transferred to allotment, still 3,50,000 is left. So out of that, 2,50,000 is transferred to calls in advance, that is first call and second call. Okay, still 1 lakh rupees is left, which cannot be adjusted anywhere, so it is returned. Okay, so 1 lakh plus 10 lakh, it is 11 lakh rupees is returned. In calls in advance, 2,50,000 is adjusted to allotment is 1,50,000, and capital it is 5 lakhs. Okay, so 20 lakh, out of this 20 lakh rupees, 5 lakh is transferred to capital, 1,50,000 is transferred to allotment, 2,50,000 is transferred to calls in advance, and the balance 11 lakh rupees is refunded. Now the entries. Okay, first, on 4 lakh shares at the rate of rupees 5, 20 lakh rupees is received. Now to understand this second entry, we have to go through this table. No, 20 lakh rupees is received, and out of this is the adjustment. Okay, 5 lakh to capital, 1,50,000 to allotment, 2,50,000 to calls in advance, and 11 lakh is refunded. That's why out of this 2 lakh, 5 lakh is credited to capital, 1,50,000 to allotment, 2,50,000 to calls in advance, and the balance 11 lakh is returned back to the applicants. Okay, now equity share allotment to equity share capital, 7,50,000 rupees. Allotment money is received to the extent of 1,50,000, so the balance 6 lakh is received here. Okay, see the last entry. The last entry is bank account to equity share allotment 6 lakh rupees. Out of this 7,50,000, 1,50,000 is already received, so 6 lakh rupees is received since there is no arrear. Now equity share first call is made due. Equity share first call to equity share capital, 7,50,000 rupees. Now according to the question, 1,50,000 is already received, so bank account debit 6 lakh rupees. 750 minus 1,50,000 on 20,000 shares at the rate of 7.5, 1,50,000 is already received. So calls in advance was earlier credited. Now to adjust that to the share first call, it will be debited. So bank account debit 6 lakh rupees, calls in advance 1,50,000, to equity share first call it is 7,50,000 rupees. Okay. Equity share second and final call 5 lakh rupees to equity share capital 5 lakh rupees. It is made due. Now out of this second call also, on 20,000 shares we have already received 5 rupees on 20,000. So 1 lakh rupees we have already received. So calls in advance will be debited. Balance 4 lakh is received through bank. So bank account debit 4 lakh, calls in advance 1 lakh rupees to equity share. Second and final call it's 5 lakh rupees. Okay. The third case is very important. Understand this table. Okay, if you have any doubt, you can message me, call me. Then the second entry is very important. Okay, all these adjustments. Okay, go through this properly, solve it yourself, do the calculation yourself. Regarding doubt, you can message me or call me.